the federal government has decided to continue Mera Pakistan, Mera Ghar low-cost housing scheme for those whose loan applications have been approved and those who have paid advance. Finance Minister Miftah Ismail says that the government has asked banks to reduce interest rate charges as well. Earlier this month, Miftah had announced reshaping the scheme, citing an increase in interest rates. On July 22nd, the finance minister said that a cheaper and more widespread scheme will be rolled out soon. We asked economist Ammar Khan how promising does the new policy look.
Okay, so regarding the reshaping of the Mera Ghar, Mera Pakistan scheme, I think this is a good step. A lot of people had their applications stuck. So what happens is people had already given down payment. They were expecting loans to be processed, but then that never happened because a lot of things changed. Now the government is saying that, you know what, we can continue with those loans, whatever was in process, that can be processed and those people can get the loans. However, going forward, the scheme will be restructured and through that more people will be able to get loans and it will be more widespread. So I think that's really positive. What it does is it solves the issue of people who had their applications stuck, and going forward it still allows or gives people the room to further, I would say, get mortgages from banks at concessional rates. How soon do we expect the government to roll out the scheme? I think it would take a few weeks considering the kind of challenges the government is facing right now. But it will eventually happen because the scheme was fairly successful and that ensured that a mortgage market can eventually be developed in Pakistan. Okay, so regarding interest rates, now this was a concessional scheme. The banks give a loan to people at a concessional rate, let's say around 6% or 4% in certain cases, and the government of Pakistan used to subsidize that. Now what was happening is the subsidies increased substantially as the interest rates increased. So they're going to rework the spread such that the banks can get a lower spread or can get a lower interest rate spread and make slightly lower profits than what they were making earlier. Because what's happening is a lot of the, I would say, credit risk or the risk of people defaulting can also be covered through an institution called the Pakistan Mortgage Refinance Company, which can cover certain risks as well. So and as well the government is also underwriting some of the risk. So as the banks were not taking substantial risk here, it just made more sense to reduce the overall interest rate margins or interest rate spread such that the profits can be rationalized and the overall subsidy given by the government can also reduce. So I believe this is a good step. This will ensure that there is stable supply of funding for low-cost housing and for people, and that will incentivize people, a large number of households, to actually own their own houses. So overall the scheme, I hope that the reworked scheme makes sense for both the borrower and the bank so that we can really keep working on the overall, I would say, tempo or the overall momentum that the mortgage market had assumed over the last, I would say, 18 to 24 months.